to date, we've seen people that have specialized in the United States, for example, a lot of known quantities in that regard. We've seen others that have come out of the EU that have done very, very well. And for example, bridged, EU to Africa as a corridor, for example. But thus far, nobody's really bridged together all of the above. And in addition, reached into Asia and really assembled this kind of seamless mesh settlement network that we've all been talking about for a long while with stablecoins, but haven't yet built. So as a derivative of that, right, like on-chain FX will become a thing once that technology and those capabilities are built. And this kind of future state that we all talk about where a large majority of global commerce exists on-chain will actually come to fruition. And so I personally am really excited to begin assembling that future on a kind of bigger scale now.
Welcome to Tokenized, the show focused on stablecoins and the institutional adoption of tokenized real-world assets. My name is Simon Taylor. I'm your host for today, author at Fintech Brain Food and head of market dev over at Tempo. And no Kai today. He's making his way back from Money 2020. He's managed to lose his voice in Vegas. Hopefully nothing else. But boy, do we have some incredible guests with you. Joining us is a returning guest, Daniel Mottice, who is CEO and co-founder of Beam. How are you doing, Daniel?
I'm good, sir. Thank you for having me.
Good to be with us. And another returning guest, Itai Turbahn, CEO and co-founder of Dynamic. How you doing, Itai?
Can't complain. Still waking up.
Still waking up and managed to make it through the Money 2020 madness. But my goodness, that's a good group by himself. But, well, in the middle of a couple of big on-chain acquisitions that you might have heard about, we're bringing on the one and only Matt Marcus, CEO and co-founder of Modern Treasury. How you doing, Matt?
Doing well. I lost a few hands at blackjack at Money 2020, but well, otherwise.
Yeah, well, it feels like your home court does Money 2020. I'm assuming for all of you, it's not your first show and not your first rodeo. Would love your thoughts and reflections on Money 2020 at some point if we get time today. But I want to jump into this first story before we do. And I've also got to remind everybody before we get into the content, views and opinions of contributors today are their own and might not reflect those of companies they represent. Please don't take anything we say as tax, legal, or financial advice. First story. From just about everywhere, there's this company called Modern Treasury acquired another company called Beam for a reported $40 million, which is very, very exciting. I'd read out the press release, but Matt, remind us who Modern Treasury are and tell us a little bit about what excited you about Beam, and then make Dan blush in the process if you can.
I think we can manage that. So Modern Treasury, we're a payments infrastructure company. We're headquartered in San Francisco, and we work with fintechs, marketplaces, really anyone that moves a tremendous amount of money. And we provide them easy APIs that enable them to connect to the financial system. So to date, we've enabled our customers to move hundreds of billions of dollars. And we work with startups that are getting started up to publicly traded or established businesses. So you can think of folks like Procore, launching Procore Pay, their embedded payments offering, Built Rewards for helping people pay rent, folks like Navan with T&E reimbursements. And so really we thrive at the intersection of companies moving money at scale. And we've lived the pain around money movement, working with the traditional financial system. And really, how do you build the proper systems to do that? And, with everything happening in stablecoins, we see a tremendous opportunity to provide modern infrastructure that works across fiat and stablecoins. And really, stablecoins is a way to improve on the legacy financial system, but it also needs to be interoperable with it. And so earlier this summer, we got to talking with Dan about what he was building at Beam. And we really saw the visions for the companies intersecting around the future of money movement. We were very impressed by Dan, too, his background being early to the space. Really,
there it is. There's the blushing. That's what I wanted to see. That's it. Very impressive, Dan. Very impressive. No, but go ahead, Matt. Sorry.
Yeah, well, I'll say, as part of the diligence process, I spoke with a lot of Dan's customers, folks who had worked with him, and everybody spoke really highly of the Beam team for their expertise, how they helped them navigate this world, the product that they built. And Beam has worked with customers like Sling Money, who have enabled some of these off-ramp flows leveraging stablecoins and instant payment rails like real-time payments and push-to-card. And so we saw together this opportunity to accelerate our roadmap, but also this vision around enabling seamless fiat and stablecoin payments through one API and one platform. So we were very excited when Dan agreed to join Modern Treasury via the acquisition. And now we're off to the races. Now we're building, working with our shared customers and building an integrated product inside of Modern Treasury.
Well, Dan, it'd be rude not to bring you in here, but I want you to also reflect on sort of the business you'd built so far and how customers kind of like some of the pitfalls of getting into stablecoins and some of the problems you've solved, because I think that's really educating for a lot of people that have not had to implement stablecoins before, but, maybe stablecoin curious.
Yeah, absolutely. And echo Matt's sentiments about the Modern Treasury team as well. We've been tremendously impressed with them thus far and through the process, and we're really excited to work with them. I guess for a bit more context on what we built at Beam while we remained independent, we really indexed kind of the orchestration layer, which was what people are calling it now as it relates to on and off ramp, against instant payment rails. So a lot of other platforms in market right now have made it very easy to get into and out of stablecoins. We wanted to do that instantly via rails like Visa Direct and also RTP and more recently FedNow. And so to kind of add a little bit of commentary to Matt's point, they historically have been a key enabler of RTP and FedNow in the United States. And as we got to understand where the Modern Treasury team was headed as it relates to more directly entering the flow of funds on both the fiat side and the stablecoin side, we really believed that it was a match made in heaven, and we could tremendously accelerate each other's roadmaps. And so, as Matt said, super excited to be building with the larger team now. I think as it relates to the pitfalls of building in stablecoin land, there have been many. I think one of the things that we're very excited about is, to become a leading enabler of this technology in a way that's hyper scalable, hyper performant, and can really process the hundreds of billions of dollars that, we believe that this technology is capable of. To date, there have been other awesome enablers out there, and a lot of them are now, entering the press more recently as it relates to other acquisitions. And we've learned a ton from how they've built their systems, and emulated a lot of how they've built their systems as well. But we have kind of in-house ideas about how the systems that we're building can be made even simpler and made even easier for people to really take advantage of the tech. And so Modern Treasury's platform is amazing. The tech's amazing. Now that we'll be kind of facilitating money movement as a service for Modern Treasury customers and Beam customers, there's only so much more, there's so much more that can be done together.
It's exciting times, guys. I mean, look, as a fintech nerd, it's nice seeing the fintech heritage here. Dan, you came from Visa. You've been in fintech for a very long time before you were in the stablecoin space. Matt, I think of Modern Treasury as like among the fintech nerds, possibly the nerdiest. Like I often reference the explainers you have on your website as the gold standard for like what I want explainer content to look like. So I'm really like there's a nerd marriage here that I think is quite beautiful. But I want to get your reflections on this. I mean, we'll come to some other M&A activity in the market in the not too distant future, but what do you think's going on as you see these sorts of couplings, and what are you hearing? What signal is this sending to the market?
Yeah. So first, I'm biased here because I think the world of both Beam and Modern Treasury. I think I'm a huge fan of both. So this is really exciting to see.
Can you just say they suck? Let's have some anger here.
Terrible companies here. Terrible companies here. I tough to be even on the same podcast.
I think we have to comment on your acquisition in a few. So watch what
exactly.
you say.
Turn it out will be fair play.
That's right. I'm buying some goodwill here on that. No. But in all seriousness, I've side note, I've been following Modern Treasury since pretty much you guys have been established. Given I went to business school with Dimitri, so I kind of have seen it through outside looking in, and have been a fan from the sidelines for a while. And same with Beam, right? So I think I've seen it from day one. And for me, I kind of coming back to these are all like fintech rails and crypto rails are pretty much like the same rails, right? They need to be intertwined, right? And over time, they're going to be more and more intertwined, right? The movement in and out of stablecoins needs to be accelerated. It shouldn't be like a separate topic, right? Today we talk about it as on-ramps and off-ramps. But in the future, it's just a thing that your fintech infrastructure provider should provide to you, right? Just like we don't talk about the exciting world of moving on-ramping into ACH and out of ACH, right? It just kind of works, and the assumption is that it's a part of the service that any fintech infrastructure provider provides. right? And so for me, it kind of looks as a very natural progression of all these rails are financial rails that are getting combined. I'm very hopeful in the future that we don't have anything like crypto conferences or crypto podcasts, but they're just fintech podcasts, right? And fintech conferences, right? And that also implies that there are no crypto fintech companies. They're just fintech companies that might be crypto first, right? And so that's why this is very natural as a fit for me. And I think we'll talk about other M&A activity in the space that also fits into that kind of same bucket. That's how we view it from our end. The fact that I have to tell someone, hey, you get an embedded wallet in the case of Dynamic, but now let me tell you about on-ramps and off-ramps is a very weird conversation. And I would rather just say, no, it just kind of works.
Can we get to it just works, Matt? I know you guys have done something really interesting with stablecoin backed accounts or stablecoin financial accounts. Do you want to explain what they are and what that looks like to a customer? So I'm, sort of a small business, or I'm a fintech company, I'm a money mover. What does stablecoins give me that I didn't have before, and how does that fit with everything else?
Yeah, that was the first foray we had into stablecoins, was looking at stablecoin-backed accounts, somewhat like an FBO account that a lot of these fintechs get. So a way to hold customer funds through a different vehicle. And I think we've seen over the last few years, it's frankly become really difficult for fintechs, whether they're early stage or late stage, to establish partnerships, whether they're bank partnerships or otherwise. The regulatory landscape has changed a lot. And so we looked at that as a way to accelerate innovation. So a way to have a medium for fintechs to hold customer funds in stablecoins. But the key thing there is the interoperability. You still need to interact with the fiat rails and the traditional banking system, even if you're holding funds in stablecoins. And so that's the type of thing we'll accelerate with Beam in the Modern Treasury product, is the ability to hold funds in stablecoin-backed accounts and wallets. And I think we're going to bring this fiat lens based on our experience. We've done some crazy stuff with fiat, also some things that are not crazy, just well and at scale. So ACH debits at scale. I think we don't see a lot of that in the stablecoin landscape. Real-time payments at scale. The Beam team has done that quite a bit. We're going to add a lot more on there so you can orchestrate these stablecoin to fiat or vice versa flows. And I think even the cross-border flows, we've done a lot of that too. And our perspective is it's a lot like FX. We talk about on-ramp and off-ramp, but at the end of the day, we're moving between different currencies, and you need to orchestrate that well. And one of the things that the stablecoin-backed accounts need is a strong ledger under the hood. And there's been no lack of news about bad ledgering over the last few years. But one of the things...
For those who don't remember, of course, there was the Synapse Evolve kind of set of issues there where customers were locked out of their accounts, and some even lost their life savings. And the evidence it appears to, or is alleged to point to, some issues around ledgering. We couldn't agree where the money was. I think that's what, Matt, you're alluding to there.
Yeah, that's definitely one of them. And, one of the things too is our other product, our second product, is a ledgering database. We built the first ledgers database product on the market. So we work with actually a lot of the leading crypto exchanges, stablecoin issuers, and provide that ledgers offering to them. And so we see what it looks like before they use ledgers. And people aren't ledgering in a lot of cases. And so I think it's important as we look at how do you do stablecoin and fiat payments at scale, hold customer funds at scale, that we don't lose sight of that, and that you have a platform that actually thinks about ledgering as a first-class concern at scale, provides visibility to the fintechs. So that's what we're bringing to the space.
I think that's the kind of plumbing that we forget about sometimes when we talk about stablecoins, is that if I'm going to build a stablecoin linked card or some kind of neobank, or I'm going to do payouts and payroll, or any of those use cases that are really hot, or even just corporate treasury, ultimately, I as the CFO, I as the entrepreneur, need to build my own ledgering capability, and I need to manage the plumbing between rails and kind of across rails. Dan, I want to come to you on just any of the thoughts that you have for where we're going now. What are you guys going to be focusing on? What do you think the key issues are and the gaps that we have to close to kind of make stablecoins mainstream?
Yeah, absolutely. In terms of, focus for the next, call it 3 to 6 months. We're really focused on getting to kind of one team, one dream, one code base basically right now. So,
one
you know,
team, one dream, one code base. Wow.
there you go. You can coin it. Um, all the various customers that we currently work with at Beam will remain untouched, though it is our intention to holistically integrate the Beam product and team into the Modern Treasury platform such that we can, arm folks around the world with kind of the best-in-class technology that the Modern Treasury team has created, now with the added kind of capabilities that enable them to use the Modern Treasury payments platform under the hood as well. So that's the main focus, and really will be kind of what we're sprinting after over the next kind of couple months. I think beyond that, I think we've yet to see what it looks like when an orchestration platform kind of seamlessly bridges together multiple jurisdictions. To date, we've seen people that have specialized in the United States, for example, a lot of known quantities in that regard. We've seen others that have come out of the EU that have done very, very well and, for example, bridged, EU to Africa as a corridor, for example. But thus far, nobody's really bridged together all of the above. And in addition, reached into Asia and really assembled this kind of seamless mesh settlement network that we've all been talking about for a long while with stablecoins, but haven't yet built. So as a derivative of that, right, like on-chain FX will become a thing once that technology and those capabilities are built. And this kind of future state that we all talk about, where a large majority of global commerce exists on-chain, will actually come to fruition. And so I personally am really excited to begin assembling that future on a kind of bigger scale now. Of course, it will take time. There are business models out there that have kind of, that we can emulate that will allow for us to do this. But I'm really, really excited for that version of the future where I think the true value of what stablecoins can offer will really come to fruition, and there probably will be use cases that we've never even thought of that come to market and that are built on top of platforms like where we'll be building at Modern Treasury and like Itai and the Dynamic team will continue to build now on under the Fireblocks family. So exciting times to come. I think the best is yet to come, and I know they always say this, but we're really still in kind of like inning one of many here as it relates to global adoption and true institutional adoption and migration of the vast majority of capital flows actually happens in an on-chain environment.
Yeah, it's tiny, but the growth denominator is really significant. And I think that's what people are seeing. I saw in the Visa results that they mentioned their stablecoin linked card volumes were up 4x quarter over quarter. Now, if that continues for a few more quarters, it goes from being like 2 bips of their overall 2024 volumes to, sort of 4, 8, 12, it very quickly becomes meaningful amount of their overall volume if we continue to see anything like that kind of growth. And I think that's why potentially the next story is an interesting one, which is Fortune are reporting that Mastercard are in talks to acquire zerohash for around this 1.5 to 2 billion mark. And what's interesting with this is a couple of weeks ago, we covered the story of apparently both Coinbase and Mastercard are looking at BVNK as well. Itai, I know you've worked with quite a lot of the zero hash, BVNK, conduit, bridge type of players in the market. What role do they play, and why do you think somebody like a Mastercard might be interested in them, given the role somebody like zero hash plays?
Yeah, absolutely. So first, again, biased a little bit. Zerohash is a dynamic customer and a very close partner, and we are giant fans of that team. I have no information about whether any of those headlines are true, but so outside looking in here, the role a zerohash plays is a very critical role. Really, what zerohash does is moves money from fiat to stablecoins and from stablecoins to fiat. Right? And that is, it does it at global scale, and it does it in a compliant and very powerful way, right? So zerohash has MTL licenses, it has licenses in New York, it has licenses globally, and it takes a challenge that should be behind the scenes, and moves it to be behind the scenes, right? It moves it from something that is front and center to just saying, you need a digital dollar, give me $1, I'll give you a digital dollar. You need a physical local currency, give me digital local currency, I'll give you physical local currency. It's an extremely simple idea, but extremely, extremely powerful. And back to the point of when we get these stablecoin rails and global first kind of fintechs that run on crypto, those types of companies like zerohash, like Beam, Bridge, and others serve this massive role for money in, money out, right? If you're Mastercard, you're, in my opinion, you're looking at, again, I am a giant, financial corporation. I'm in the business of money movement and global network of money movement, and this is going to be a material part of it. And so you want to, and that's why I think, MasterCard would be looking at a BVNK that also does a similar thing to an extent. There's some nuances, or Bridge or any one of those, and say this will be a potential big part of the future of how money moves. And I want to be in a position where I can have visibility into that money movement, have a big impact on that money movement. So that's, if I'm Mastercard, that's how I think about it. I'm curious about what Visa does as a result of this, right? Because there aren't that many kind of players in the market left with that scale and that impact that a zerohash or or a Bridge or a BVNK have. I am curious what their strategy is, but that's why Mastercard is moving the way it's moving, in my opinion, which is it's a critical part of the rails and connection or plumbing. I think, to your earlier point, plumbing between real OG fintech and stablecoins.
OG Fintech. I feel like that's a T-shirt that needs to happen for Fintech.
I got you covered.
Or something like that. We'll make it happen. Look, viewers, listeners, if you're interested in hearing from Ed Woodford himself, about 4 weeks ago, we had him on the show when they raised $104 million. So I think it was episode 50 in your podcast feed, or if you're watching on YouTube. And he sort of lays out that I think that there's somewhat of a different business, as you say, between BVNK and Bridge, who are very stablecoin centric. Ed and zerohash have been around since 2017, so they predate them. They do a lot more around the on-off ramping directly into other assets. They help financial institutions do buy, sell, hold, which is not necessarily something Bridge or BVNK or some of the others have really focused on. And so there may be some interest there in helping Mastercard's financial institutions come into that space. Zerohash is a little bit of a different organization in that sense. And then also, as I look at it, you've got to think, to your point, this is a different rail and a different way of doing things. And Mastercard, don't forget, runs the UK's instant payment network, Faster Payments, with a business they acquired called Vocalink. So it's a meaningfully different strategy. So fascinating times. Any reflections on this one, Dan, as you look at these stories? I know you've just been acquired. There are other stories of acquisitions. What do you think this says about the market?
Yeah, I think it's awesome. I mean, it's the validation that I think we've all been, knowing would come at some point and is now coming, leaps and bounds. Yeah, exactly. We made it. I think I was going to mention the same point on Vocalink. I think historically Mastercard has been the first mover from a card network perspective as it relates to alternative ways of moving money. The Vocalink acquisition happened well before I think Visa entered alternative ways of moving money. And so it makes sense to me that they'd kind of be first mover here. I hadn't thought about the possibility that they could expose the crypto brokerage as a service capabilities that I'd kind of allude to as it relates to zerohash's kind of key distinction and where they really crush it. And then as it relates to stablecoin orchestration broadly, they have, in my opinion, and I believe I believe it's kind of the most licenses of any of the folks in this category around the world by a pretty large order. A solid amount in LATAM, obviously fully licensed in the US and many other places. So as I referenced in my previous comment, right, there's so much to be done to stitch together this fabric with an orchestration layer, if you will, like Mastercard on top of the kind of infra layer and regulatory coverage that zerohash has built out. There's going to be a lot of really interesting stuff that can come to fruition now. So to Itai's point, cannot confirm. Obviously, I'm hearing rumors. Who knows? We'll see what happens over the next couple of weeks. But I'm excited to see the validation and rooting for the zerohash team as always. We also have historically had I've done some business with them in the past, and their platform really does work very, very well.
Good stuff. Matt, any thoughts that you want to throw into this one?
I think it's great validation. So we'll see a lot more companies pushing into stablecoin payments as they see these acquisitions happening. I'm curious to see what the pace of innovation looks like for these larger companies getting acquired by even larger ones. And I think it honestly creates room for the type of products that we're building together with Beam, new startups that are coming out with new ways to handle stablecoin native payment rails. And so I'm very excited for the market opportunity overall, what it means for us as we integrate Beam into Modern Treasury.
Perfect. Well, listen, I'm sure we'll hear a lot more about this. I think as there's always a risk we're in a bubble and that people are exiting the bubble, but I think the opposite's true. And Matt, I really look at folks like yourselves as being people who only respond when there's a there versus sort of chasing trends and chasing hype. And I saw the A16Z's annual 2025 crypto report kind of covered one of the most interesting trends recently, which is stablecoin volume growth has completely decoupled from price action in crypto. So I think it's no longer the case that it's a speculative market. Itai, you saw that too?
Yeah, I did. And I'm actually extremely bullish on this, right? Like historically, we've talked about crypto as a financial, asset. And now we've shifted the conversation to crypto as a technology rail, right? With things like L1s like Tempo, etc., it's moving towards being essentially a very complementary, global first, super fast, super cheap set of financial rails that you can leverage. That is a far more interesting conversation to me than price of Ethereum going up, going down, right? That's where the value is. That's where, by the way, coming back to Money 2020 conversations, those were the conversations that were being had, are conversations about can we remit money faster to the other side of the world? Can we pay vendors, right? Can we run a global first neobank? So that decoupling I saw that as well, makes me extremely bullish because it means that we're moving towards the dream, which is, hey, this is just a better way to move money.
Yeah, one thing
revenues.
One thing I'd just add too, I mean, there's the VC data, but on our side, just to add other data points, we see our customers who are fintechs moving money in the US, like escrow businesses, for example, coming to us every day asking about stablecoins. So it's very real. It's not tied to the asset prices. People are interested in the technology, what it means for their business.
And Matt, that was the signal I was looking for, which is your customers are asking you for it, and they have nothing to do with crypto. They're not even necessarily the most tech forward in the world. They've just heard of this stablecoin thing and they want to know if it can help them operate their business differently. And I think that's such an important signal because it can be very tempting in the middle of such a sugar high of M&A announcements and other things going on. Maybe we are at the Gartner hype cycle moment for stablecoins, but there's also a there. I think both of those things can be true, and that's a really important point. Listen, we'll just take a quick break here while we hear from our sponsors that make Tokenized possible, and we'll be right back. This episode, if it isn't already obvious, is sponsored by our friends at Visa, the leader in digital payments. Visa's Tokenized Asset Platform, or VTAP, uses smart contracts and cryptography to help banks bring fiat currencies on-chain, whether it's launching a stablecoin or deposit tokens or something else. VTAP allows financial institutions to issue fiat-backed tokens, improving financial efficiency and enabling programmable finance. Check out the links in this episode's description to express your interest in VTAP. This episode is sponsored by Bridge, a Stripe company. Just as the internet made information global, stablecoins are making money global. Bridge, a Stripe company, is the infrastructure powering that shift. It's built for speed, scale, and simplicity. Bridge helps businesses send, store, and accept stablecoin payments instantly. You can serve global customers without navigating the complexities of setting up those crypto rails. It's how companies like X, Shopify, and AirTM unlock new markets, reduce their FX costs, and move money at internet speed. Explore the future of global financial infrastructure at bridge.xyz. Tokenized is also sponsored by Fireblocks. Fireblocks is the stablecoin infrastructure of choice for global businesses from Visa to WorldPay to Bridge to Revolut. With over $100 billion in monthly stablecoin volume, Fireblocks powers stablecoin strategies at scale with infrastructure that enables PSPs, fintechs, remitters, and banks to issue, move, hold, and manage stablecoins. It's all done securely at scale with secure built-in compliance. With Fireblocks, you get complete control to build your own stablecoin orchestration layer, create payment accounts, manage liquidity, and access on and off ramps in over 60 currencies. It makes it easier for you to build and scale and expand your business globally. Learn more at fireblocks.com. Thank you to our sponsors. Alrighty, look, this story I saw in quite a lot of places, and it struck me as one that was quite surprising, but really interesting. IBM has partnered with DFNS for a digital asset haven. Now, strange names aside, this platform is designed to manage the entire crypto asset lifecycle from custody and transactions to settlement inside an IBM Z series mainframe. And that's important because most financial institutions around the world, 70% of the world's money, moves on some kind of IBM mainframe. This digital asset haven will support up to 40 public and private blockchains, and it also supports programmable multi-party approvals for pre-integrated services like KYC and identity and AML and predictions and yield generation and a lot more. Itai, I know you know this world really quite well. What are your thoughts on folks like IBM moving here? Is this we had to catch up, or do you think that they can really take this to market?
Yeah, it's a great question. By the way, side note of the day, I used to be an IBM research employee about 15 years ago. So on the list of full circle moments, that is one that was not on my 2025 bingo card of IBM coming into the space. First, huge shout out to the DFNS team who are awesome for kind of partnering with IBM. I'm still on my end. I still don't know that I have a really good grasp of what is the go-to-market offering that IBM is going to go with. But what I have learned about IBM is that even as a former IBM employee, is that my understanding of their business is very limited, and yet IBM controls the world, right? They have this massive amount of things that move through the IBM system. My outside-in looking perspective is they probably have identified a lot of customers that are coming their way and saying, look, I also want to now move stablecoins, right? And for them, they have to choose a system that is an MPC, right, a multi-party computation type system to do that. They have to establish some kind of first step in the market. In my opinion, again, outside looking in, they're probably leveraging this to test out interest from their customers as to how to bring stablecoins into the business. So I read this much more in the lens of a giant corporation putting kind of something out there as a first test to gauge market interest versus kind of an all-in IBM's now a stablecoin company. That would be the lens I would look at it, and I would argue that if this successful, if in a couple months and years we see follow-up announcements from IBM as to more and more integrations into their system, I think that would be success. I count that as kind of the opening bell for IBM, not the full product.
All right. Well, I got to move to the next story in a second, but very briefly, Matt, your thoughts on this one?
I don't have much to add here. I think it's a sign for what's happening in the space. IBM's giant company here. I think also about products like IBM Watson, and so I'm not still totally sure what the products do. Like Itai was saying, what's the go-to-market offering? So we'll see. It's early.
Well, for our next story, we are joined by another incredible guest, Michael, who's the CEO and co-founder of Fireblocks. Thank you for joining the show. Michael, how are you?
Simon, great to see you.
Good to see you, and thank you for being a great sponsor as well. So the next story may even involve you, sir. So hold on to your seat. This is about a company called Fireblocks acquiring a company called Dynamic. Now, Itai, actually, I'm going to come to you first. Just remind us, if people have forgotten, what you guys do at Dynamic.
First, I'm sad if people forgot what we do. I hope everyone listening already knows, but I'm kidding, just in case, Dynamic is a wallet infrastructure company for developers. So if you're building your next remittance app or global neobank or payroll app, and you want embedded wallets, non-custodial embedded wallets in your app in order to store money for your end users, in order for your end users to trade new asset classes, we give you the infrastructure to do that. So as a developer, within 10 minutes, you can spin up non-custodial embedded wallets for your users within your own UI, own interface. It works today on companies like Kraken and Stripe and zerohash and many others. Kind of leverage this technology to power embedded wallets and external wallets for their users.
And so, Michael, you sort of said in the press release, this means Fireblocks has the complete stack for on-chain finance from custody to consumer. Can you expand and simplify, what that means and where Dynamic fits into the Fireblocks ecosystem?
Yeah, sure. So I think, hopefully some of the users are familiar with Fireblocks. For the last 7 years, I think we've been able to power most of the fintech and crypto native organizations that were working in the digital asset space broadly in crypto, and it really spans across anything from the most forward looking crypto native companies to the largest fintechs like Revolut and Nubank and so on, to all the market makers like Wintermute and FalconX and Cumberland and so on, and then of course like the banks. Now, in the last couple of years, a lot of the incoming, or last, I would say 24 months, a lot of the inbound that we were getting and the market that was very important for us is also the various remittance companies, so the international money movers. From our standpoint, what we've been focusing for the last couple of years is really empowering both their operations teams from a treasury standpoint. It's kind of like the Fireblocks UI that people are familiar with, and also the backend development. They were using our what we call direct custody wallet as a service infrastructure and key management to basically create experiences that it's kind of like more of a CeFi experiences, in some cases also DeFi experiences. What we're seeing now, more and more people coming, is that they really want to provide their users something that is a much more DeFi on-chain experience, whether it's using non-custodial wallets or custodial, doesn't really matter, but they really want this to be an on-chain wallet or an on-chain account. I think that's almost the terminology they want to use. And maybe the most important thing about all that is that they want to do it very, very quickly, right? So they literally want something that is a few lines of code to integrate on-chain capabilities and on-chain functionality into their consumer experience. And from our standpoint, now we basically have the full stack to enable him to do anything from treasury, their backend wallets, their custody, and also then to essentially propagate all this functionality to their end users in a very, very simplified offering that from product and business standpoint, gives them the fastest time to market.
And so, Itai, coming back to you, sort of, what is it that enables some of that time to market, and what are you hoping to do? Like, what do the next few weeks and months look like now you're some part of the Fireblocks family?
Yeah, absolutely. So the way we enable this time to market is that you can wake up in the morning as a developer, show up on the Dynamic site, and have a fully working set of wallets for your customers by midday. Right? You're able to implement these embedded wallets, auth, show balancers to your users, bring in on-ramps and off-ramps, bring in SYN capabilities, all within a few hours or a few minutes, actually, very, very, very quickly. That's what we mean by go-to-market. It means that if you were to build your version of Venmo or your version of Nubank or Revolut a couple of years ago, it would take you years to integrate that infrastructure. Today, you can wake up in the morning and by midday, build a very basic version of a global cash app or a global Venmo app or a global remittance app. Right? That is the powerful thing about Dynamic, and that's what we do. Over the next couple months, really all you'll see from Dynamic is abstraction of more and more of that complexity. Can we take it from an hour to 5 minutes? Can we do it so that you don't have to set up 5 services in order to do on-ramps, in order to think about gas payments? The goal is that any Web2 developer, any developer that is building, again, their next remittance app or payroll app or anything of that sort, can they do it within 5 minutes without knowing anything about crypto? Right? If we have lost the plot if we start talking to folks about gas payments or on ramps or anything of that sort, right? And so the goal is to abstract more and more of that away, move that behind the veil, just in the sense that I don't show up and pitch you why ACH is better than card, right? It just kind of works in the background, and you don't necessarily need to know. That is the dynamic roadmap, is abstracting more and more of that, leveraging the incredible kind of security capabilities of Fireblocks to do that, the incredible capabilities on the payment network that Fireblocks provides, but it's just helping developers accelerate their time to market.
And Michael, before I throw it to the rest of the guys, I'm interested in your market read on the Web2 companies and sort of the broader ecosystem. You probably have one of the best perspectives of like who are the newest adopters. And you sort of mentioned some of the neobanks, the big ones, but who are you seeing as like the customer segments where momentum is gaining the fastest?
So the fastest now that is really, I think, massive wave that is now hitting, and I think we are. What people are seeing in terms of maybe the outside is kind of the beginning of it, but what we are seeing is already the middle. Is basically all the international money movers, companies like Ria and MoneyGram and all those guys, right? That's actually is coming in as we speak. And on the back of it, we are seeing the Web2 platforms, right? So a lot of the conversations that we're having right now that started to pick up post-Genius Act, and especially I think after people came back from their summer vacation and actually had a bit of thinking about what they can do here, are the big platforms, the big tech platforms that what the situation they have is that they have a very global contributors base, right? That they need to pay money to, and they want to understand how they now leveraging stable coins to do it in real time at a low cost and with transparency. And I would say that's something that is actually not obvious from the outside, because usually you talk with some executives and they would tell you, I don't know, I can use push to bank or push to card or push to whatever to do those things. Mm-hmm. Even when you go and you talk with those companies, you understand that, there are corridors that it works perfectly fine. You want to push money to people in the United States, or you want to push money to people in Europe, solve the problem, so more or less. You want to push money to people in Indonesia and Philippines and in Africa or in Latin America and certain countries, it's far from being solved, and you would get like different SLAs and different cost structures. And that variable user experience or variable SLA is really what part of the reasons why it's pushing them to look into stablecoins as kind of a first order solution. And then they're clearly also interested in the programmability of that, which is basically the second order.
Yeah, the first order, it gets me to markets I couldn't before. And then once I've got it, wait, it's programmable. I've been talking for a while about the rail above rails. And I think what Dan and Beam and sort of the Modern Treasury guys have been doing is to try and make it almost backwardly compatible with TradFi, but to have this global rail that sort of everybody uses. Interested, Dan, in your reflections as you were listening to Michael and Itai there.
Yeah, I think obviously they'll know a lot better about what they can do together. I guess from my perspective, what Michael and the Fireblocks team have built out over the last several years is kind of segment and industry defining in many ways. And I think from my experience in the space with time, Fireblocks has kind of moved up market into basically an enterprise kind of go-to-market motion and customer base, though I know they also serve a lot of other kind of smaller startups. But the way that I thought about it, kind of without letting this discussion influence things, was that this allowed for kind of the full stack completion of the kind of custody and wallet infra layer. Therefore, the Fireblocks team can now kind of service really any customer that comes to them. And now I've known Itai now off for a while. So super excited for you guys, and we should find a way to work together now that we will continue to build, and we're now entering this next chapter of the adoption cycle.
What I love about doing this podcast is not just the loving, but it's actually the market signal I get from it, and kind of how much I see how different people look at the market, and I think it's hopefully the listeners get that as well. Matt is my other TradFi guy here. How do you think about sort of some of the completion of the provider ecosystem? Do you think it's getting more integrated, and what does it mean for that sort of bridge back to the TradFi infrastructure?
I love what Itai was saying about the simplicity of building. I think that's something as we're going towards completion is not to, or more features, is not to add complexity to it. So if you're a developer building, you still need things to be easy to build, fast to market, because then you have faster learnings. And so I do think from our seat, the so-called Web 2 companies or Trad 2 ones want Web 3 to work like Web 2, at least initially. Mm-hmm. And so that, that's like the APIs, the ways of integrating, they expect it to work that way. The other aspects of Web 3 they can add on later, and that might introduce new paradigms for them. But to start with, they have a mental model. We need to meet that mental model. Otherwise, you're going to hit a wall.
Yeah. Fascinating times. Itai, you were going to jump in?
Yeah, I was going to add to that. I think that's honestly the name of the game, and that's true across Dynamic. That's true across kind of Modern Treasury. You've seen, I think, historically innovations in Web 2 that were really just around abstraction of very complex things and putting them behind the scenes, right? Whether it's Pod with bank integrations, or Stripe, or Twilio with global communication. Right? The name of the game is really, can you take a very complex set of things and put it behind a very simple SDK or an API, right? And that is what we're going for here. I think that's true for both Modern Treasury and Beam and ourselves and Fireblocks, right? It's really the about removing all that complexity and just getting the upside value of, hey, you get to tap into this global 24/7 live financial rail that just kind of works. Just don't talk to me about gas fees, right? Like that's really the name of the game here, I think, for the next couple of months and years.
Yeah, Michael, any final thoughts before we close out today, and what you're looking forward to?
Yeah, I mean, I do think that we are in a very exciting phase, but I mean, at least from to just ground everyone, there is still a lot of work, right? Because I do think that we did especially with the Dynamic acquisition, right? It allows us to move much faster with the product team and with the technical teams, and the technology teams are definitely the ones that are way more equipped, right, to adopt stablecoins and digital assets and Web3 in general. There is still a lot of heavy lifting that we need to do with the kind of gatekeepers in those organizations, right? So, like to spend 45 minutes with a 70-year-old CFO, and explain them what is a non-custodial setup, it's what is multi-party computation. It is something that's still happening, right? And I think that it will continue to happen for quite some time. This is, by the way, why we're excited to partner with Itai, is that we can now tag team, and he can do the fun stuff and I can do the other fun stuff.
No, I think it's such a good point. It's one of the reasons for this podcast is hopefully this is the episode that you can send to that CFO and say, look, this is the sober place where we say honest things like that, Michael, which is ultimately, look, Visa said 0.02% of their volume is stablecoin linked cards or somewhere around that. It's tiny, and it's not going to solve world hunger overnight. And there are meaningful things that you need to do. But also you've got Matt saying, well, we have escrow customers using this today who are not at all interested in stablecoins or fiat. They just want a thing that works, and it works better for them, for the product, the problem that they're trying to solve. And once you get to that utilitarian stage, then you can have a different conversation with the CFO. But yes, there are lots of questions. I've spent a lot of time with lots of boards recently doing this similar stuff. But there's a curiosity and an appetite to learn, which is a really exciting thing. Well, listen, this brings us to the end of the time we had today. So I want to thank everybody so much for listening and so much for watching. Before we close out, Dan, let's start with you. Where can people find out more about you and everything you're doing now at Modern Treasury?
Absolutely, yeah, and thanks again for having me and for including both the Modern Treasury team and assembling this great cohort. Easiest place to find more information on me is on X at Daniel_Mottice, and now both at Modern Treasury and at GetBeam or GetBeam_cash, excuse me. So more to come on that front.
More to come. Matt, how about you?
Likewise, you can follow Modern Treasury, and then I'm on X and LinkedIn. And then Simon, you alluded earlier to the content. We love writing, these like nerdy posts, and so you can subscribe to the journal. Like I've written some, our engineers write them, and so they're meant to be like for builders in the space, not just marketing pieces.
No, heck yeah. Itai, how about you?
Yeah, absolutely. So first, to Matt's shameless plug about blog posts and writing, if you want to learn about stablecoins, we have a stablecoin hub and a great report that you can download. You can visit dynamic.xyz, follow us at dynamic_xyz on Twitter, or Turbahn, which is my handle on Twitter, or LinkedIn if you prefer that. If you are already a Fireblocks customer, you can also reach out to your Fireblocks counterparty and talk to them about Dynamic, and they'll connect us. So lots of ways to reach out.
Yeah, there's a few Fireblocks folks with some existing customers. That's exciting times. And Michael, you and Fireblocks?
Yeah, so if you want to find us on X, you actually need to follow Itai, because I'm not on X. That's one of the reasons we bought them. To have a Twitter followership. LinkedIn, fireblocks.com. We have a lot of content that we provide there, and clearly we have a very robust presence right across the world and all the territories. So feel free to reach out to us. We have representatives that will be able to work with you.
Phenomenal. Michael, thank you so much. And thank you, everybody, for watching and listening. You'll find me at SY Taylor on Name Your Social here. You'll find me ranting into the void at fintechbrainfood.com. And if you're curious about Tempo, check out tempo.xyz. If you haven't already, go ahead and hit the like button, subscribe buttons, or any button in front of you to leave a review, and spam all of your friends and tell them how great this show was and that they should subscribe too. We appreciate you, and we'll catch you next time.